Well, Reliance Jio earnings are out. We're still awaiting the consolidated figures, but the revenue for Reliance Jio has come in at 17,481, which is ahead of the CNBC TV18 poll by about 100 crores. So there is a beat on the top line. It's a sequential revenue improvement of 5.5% that the company has reported, which means it's lower than what Bharti Airtel had reported in terms of a growth, which was 7.4%, but it's better than a Vodafone Idea at 1.2% and slightly ahead of what the CNBC TV18 poll was. That's the only figure that we have right now. We've got the profit figure as well. 2,844. So that is also ahead of our estimates by about 5% There is a profit jump of nearly 13%. We are working with a profit increase of about 7.5–8%. So profits too have come in ahead of expectation. The street focus is going to be on two factors when it comes to Jio. One, the subscriber addition. Last quarter, it was at 9.9 million subscribers in terms of a net add. But considering that the economy had unlocked, lockdown restrictions eased, smartphone shipments picked up in the quarter gone by, there is an expectation that the subscriber momentum will also pick up. So we're working with about 10 to 12 million subscribers. And secondly, average revenue per user, because both the listed peers, Bharti Airtel as well as Vodafone Idea, have reported an improvement in their ARPUs. I think these are the only two numbers that we have. So Reliance Jio's revenue growth at 5.6% and a profit growth of 12.9%. And both these numbers are ahead of what the street was anticipating.
Okay, so that's the first set of numbers that we've seen from Reliance Jio, and they are looking good. Remember, this time around as well, the subscriber addition has been about 3% quarter on quarter, and there's been an increase in our average revenue per user as well. The tariff hikes is what was expected to drive the average revenue per user, but we just have the two key numbers right now. So the net profit figure of 2,844 crores, that's a growth of about 12.9%, and 17,481 crores, the top line, the revenue, that is a growth of 5.5%. We are awaiting more numbers, but in general, this is expected to be a revival quarter for Reliance Industries from the lows last quarter.
Okay,
the retail numbers are out as well.
Coming out.
It's
so
just...
We're just waiting for those to get flashed. But Mangalam, quickly, you want to run our viewers through the versus figure, the expectations?
Yep. So for retail, it was supposed to be a quarter of sequential recovery because the nation opened up gradually. So we're expecting a near 29% growth quarter on quarter in the retail business. Of course, year on year, it will be a number which would be lower by about 1% or so. But that's understandable given the fact that majority of the more expensive items will not sell, the likes of apparel, fashion retail, as well as consumer electronics. The important number to watch out for would be the retail EBITDA. Quarter on quarter, we're expecting a 55% jump. But remember, the last quarter was an aberration. Year on year, there will be a decline of close to around 28%. We're working with a number of close to around 1,680 odd crores. That's Nomura's expectations. But the key trigger for Reliance Retail would be a couple of them. The first one, of course, any sort of clarity coming in on Amazon's arbitration award that has come in with regards to the Reliance Future merger. The second one, of course, would be any new investor coming in. In the past couple of months, we've seen nearly $5 billion come into the retail vertical, 7 investors pumping in money. So any new investor would be a big trigger coming in.
Okay, so while we wait for retail numbers, I think only the standalone numbers have been announced so far. Let's get in Devin Choksi of KR Choksi Investment Managers to analyze the numbers that we have got up until now, which is Reliance Jio, which is looking very good. We have our other guests joining in as well. Devin, let me come to you first. We have Prakash Diwan too, and in a bit we'll get some more guests on board. The Jio numbers are looking very good. It's a 5.5% growth that we've seen on the top line, almost a 13% growth on the profits. This has been the big vertical that has driven, along with, of course, the retail business, but we don't have those numbers just yet. Purely on Jio, what is your response?
Yeah, good evening, Sonia. Well, I think two things on which probably one would like to look at. From 39.8 crore customers, I think the number of subscribers have gone up to 41 crores. So if there is an increase of about 1.2 crore customers, I think, which have been added into the platform. And as I think sequentially, I think the tariff plan started getting implemented, we are likely to see, I think, better ARPU. Of course, I think this detail is still to be still awaited. But my take is that I think the ARPU would be on a higher side as compared to the earlier quarter of 140. The ARPU could be somewhere around 143.5 to 144. I think that is one expectation. If you conclude that part of it, so on one side, I think the subscriber, and other side increasing the ARPU, that translates to better numbers as far as I think the revenue and the profit is concerned, and then the margin along with that. So I think let's wait for the full number to come out. But I think these are the two things which could possibly have driven the profits on the higher side.
Okay, in fact, we're still awaiting the other numbers. But remember, the consumer businesses, both telecom and retail, are at the cusp of a very strong growth period. In fact, Goldman Sachs had put out a report where they forecast the consumer business itself to deliver an EBITDA growth of 30% from FY20 to FY25. Prakash Diwan, I want you to come in on this because currently the consumer business contributes about 35% to the overall business, both Jio and retail, compared to about 15% that we saw in FY18. So it's been a big jump already. How would you react to these Jio numbers, which are looking quite good, better than expected? And also overall, I mean, what's your view on the consumer business?
Yeah, hi, Sonia. So, the 1/3, 2/3 ratio for the new age and the old businesses is actually going to get reversed in the next few years, 2-3 years at best probably. And why I say so is a very simple thing, that the numbers are speaking every quarter. We are seeing the consumer facing businesses, the B2C businesses become much, much stronger, and that's where the money is coming in. That's where the investments are coming in. So if you see the capital allocation policy of the company, they committed a huge amount of money into these businesses. There's not much except for some maintenance and certain, segmental expansion that's happened in the refining side. Most of the money is come into these businesses, and that's what's delivering. I think the pace of growth for the company is going to be much more skewed favorably because you have retail which has started chugging along. Right now it was Jio. The Jio numbers is nothing to find faults with. And remember, the tariff plans that Jio has are far more superior in terms of being able to transmit the incremental benefits when you hike the prices. Yeah, because the number of days and the way it's packaged, it's very efficient. So there are no drops, there are no leakages there. Price hike comes in and you see the benefit translate into the RP without any lag. So that's the beauty about this. And this time there's a broadband composition that also would have kind of kicked in. The lockdown has given a huge impetus to the last mile connectivity and usage patterns for broadband as well. ARPU captures that salience as well. So I'm quite positive, and there's nothing to find faults within the numbers that we've seen. Of course, there's much more that we would need to see, especially the commentary. But absolutely happy to see these numbers come through for a company like this.
Well, from a telecom point of view and industry, the key trigger going ahead is a possible tariff increase. And both Bharti and Vodafone Idea, have reported their numbers. So what Bharti said when they were questioned about a tariff increase is that they said we're anyway at a premium. Our tariffs are at an 8 to 15% premium to tariffs. If we go ahead and hike tariffs right now, pricing goes up, then our product will perhaps become uncompetitive. So we will follow with a tariff increase as soon as one player does it. We will do it on the same day. But they will not initiate a tariff increase. They will follow a tariff increase. Today, Vodafone Idea had their conference call, and again, all the analysts asked them that, would you look to take a tariff increase? And at that time, they said, we will not shy away from being the first person to, take a tariff increase. It's most at stake for a Vodafone Idea in terms of a tariff increase. Let's see whether they do it, but that's going to be a big trigger. And of course, when it happens, it will even benefit, Reliance Jio when it does.
Okay, well, I was also going through, the average revenue per user. Last quarter, it was 140 rupees. Same quarter last year, it was 128 rupees. So there's been such a marked improvement of the ARPUs. Of course, there's been that tariff hike as well, as you said, and there perhaps could be more, but the average revenue per user has gone up substantially between last year and now. So there has been an operational improvement as well that we've seen. Sudeep Anand, the research head of IDBI Capital Markets, is also with us. By the way, we're still awaiting the overall numbers. In case you've joined in late, we haven't got the overall numbers just yet. All we have are the Reliance Jio figures, and they are looking very good, better than expectations. A good 13% growth is what we've seen on the bottom line, and about 5.5% top line growth. Sudeep, your thoughts on, the stock has had a huge run up. It's up 35% this year already. Based on just Jio numbers, what would your view be?
The Jio number is more or less in line with our expectation, and the key things to watch out would be the subscriber addition and ARPU. And even if you look at the last, say, 3 to 6 months, we have seen a significant run up, mainly driven by the company is actually earlier was a very heavy debt burden company. And with the continuous stake sale in Reliance Retail and Jio, now the company is a net cash company, which is a significant positive. And even if you look at the earlier, the company was more of your O2C business kind of this thing. Now it's a more consumer-driven business, and as just said, now the reversal is happening from the commodity business. It is moving towards a consumer business, which is itself a very good positive.
Right, fair point. We also have Rajiv Sharma with us. Rajiv, I remember, had said that, as soon as Reliance starts selling beyond 5-6% stake in retail, we will have the re-rating coming in for there. Rajiv, your thoughts on the re-rating potential for the retail business? Do you think most of it is in the price? Currently, if you just take a look at the money that they've raised versus the stake that they've diluted, it would be close to around 4.4 lakh crores in terms of a valuation. What are the further re-rating triggers for the retail business?
Yeah, hi. I believe that from here on there is the recent Amazon and the future the ruling which came in the Singapore court that is coming as an some kind of poor visibility on the overall consolidation of the retails because everybody was expecting the Reliance future deal will go through very easily. Though they are likely to continue, but there is some amount of confusion among investors around that. And once there is more clarity around that, I think market will start pricing in, the money which has been raised in retail. But what we are not seeing in retail yet is Facebook or Google, someone which is a global tech and very strategic coming into retail yet. So I think once you have a more global tech giant or a global retail giant coming into the retail business, that could be a big catalyst coming ahead for the retail business.
Rajiv, how much will Jio Fiber, the broadband business, contribute to Jio's numbers this time around? What's your own expectation?
They are not providing any, separate reporting for that. And we do not know, what are the current ARPUs there and what is the current subscriber base. But my sense is that it will be less than 1% in total revenues. That this quarter and the previous quarter, there should have been huge traction. So 5.5% growth, which we are seeing in sequential revenues in the mobile business. There should be good contribution coming from the Jio fiber business this quarter and the previous quarter. But we'll have to wait for exact disclosures because, we do not have neither the subscriber numbers nor the ARPU numbers for that business.
All right, we take that point. Rajiv, you were alluding in the retail vertical, you were talking about the irritant that Future and Amazon, the arbitration in Singapore is currently right now. Does that mar any of your timelines in terms of expectations, any sort of valuation disruption? Is it a deal breaker or a speed breaker?
Well, when the whole deal was announced, there were assumptions that this will quickly get Reliance 3 years ahead, the whole retail business 3 years ahead of what they would have been able to do otherwise. But with this whole arbitration coming up, it's difficult to say how it plays out. But there could be a 6 to 9 month delay in the overall plan. So till that, investors will not get excited till the time they have complete visibility and clarity. Because there is arbitration in one jurisdiction, there is deal in other, so there is some amount of confusion here.
Okay, all right. Well, Rajiv, just stay on. In fact, we're still awaiting the numbers. So let's just do one thing. Let's try and get you an update on what you can expect this time around from the Reliance numbers. Now, remember, this is a quarter where most of the businesses are expected to recover. So on a consolidated basis, we are expecting a revenue growth of 20% at 1.06 lakh crores. The EBITDA is expected to go up by about 7.5%. And across all segments, whether it's the petchem segment or even retail, there's an expectation of a recovery. The the only numbers that have been delivered so far are Reliance Jio, but overall as well, there's a recovery that we're anticipating. Prakash Diwan, I want you to come in on this because do you think that a lot of the good news of the earnings is in the price, or is there more to go? Because there are several triggers, you know, as Mangalam was also pointing out, there could be further stake sales in the retail business that a lot of people are talking about. There are the domestic demand has gradually improved in the petchem segment, etc. So do you think that there is still more to go in terms of earnings growth which could be priced into the stock, or is most of the good news in the price?
Oh, well, with a company like Reliance, you can't ever rule out positive triggers in the offing because they've got so many multiple businesses growing at such rapidity that it's difficult to keep a lid on what kind of new areas they would kind of want to look at. And remember, the platform is so strong that the triggers could only come from, they could be tangential if not linear. But for example, I keep on saying the Jio platform, the way it's got beta tested, and I've been talking to a lot of vendors who have started participating in that, the feedback has dramatically changed in the last 2 months from when they started off. Naturally, the supply chain is kind of getting in place. So if you have speed breakers, I love the way Mangalam said, is it a speed breaker or a deal breaker? And I think it is a speed breaker because the entire value chain on the retail side was expected to get a huge fillip given the fact that there's an established infrastructure that you could acquire and start rebuilding on. But let me tell you, Sonia, the key triggers here, the 5G, this thing in introduction is going to be a key trigger because that gives a very even platform for all players to start off from. Remember, Jio was an incumbent which caught up with the Bhartis and Vodafones of the world. Today, all of them are starting at the same footing. So there's a huge, significant trigger that they could bring in. The new phone that they decided to launch has got delayed because of logistics issues and challenges because of the pandemic. And if that were to happen, the quality of new editions is going to be very different. And the usage mix, and Rima was referring to, she was talking to Rajiv about this whole contribution of broadband, which I also mentioned in the beginning. That is also likely to be a great change in terms of estimates. What we thought will happen 2 years down the line is happening in a few months because of work from home, because of the way things have changed. So my sense is the triggers are there. They might not be direct or linear at this point in time on the earnings, but the stock has given you that kind of a 10-15% kind of a cool off from where it was just recently, right? So that gives a lot of entry, facility, the comfort for people who want to still buy or add on allocations. And the moment you see money come back in the ETF through the ETF route from global markets, I don't see any reason why at 2000, 2050, Reliance doesn't kind of, attract them. So there are earning triggers, there are business triggers, and that would translate into the stock price as well.
Okay, so Prakash is saying 5G as well as increasing contribution from broadband to Jio's revenues and financial mix will be a key trigger going ahead. What about postpaid? Because Jio also recently has introduced new plans in postpaid. Currently, postpaid subscribers are less than 1% of their overall revenue base, subscriber base, and clearly that's the more lucrative segment. Do you expect Jio to make headway in the postpaid market? Because it appears that the subscribers, which are the postpaid subscribers of Bharti as well as Vodafone Idea, are pretty well entrenched.
No, so absolutely. So, postpaid is the last frontier for the MNP battle. And I can tell you for sure that before the lockdown got initiated, there was so much of activity, especially by Bharti, in terms of migrating and trying to migrate the Vodafone customers. Because Vodafone had one of the best qualitative mix of postpaid clients. Now, it is always a nudge. It's always facilitated by somebody helping you do that and pushing you to do it, reminding you to do it. In the lockdown, that has been slightly absent. In the absence of a face-to-face kind of an interface with the sales team and with people who are good at doing it or who are specifically allocated that responsibility, it's not been happening. Let the lockdown get out. Let the unlocking be complete. I don't see any reason why postpaid could why it won't get adapted by people who are tired of the kind of network issues that you face. I mean, all of us have had Vodafone connectivity challenges, right? And if you have a postpaid account, you want to move to a congruent postpaid account. You may have a Jio prepaid, but eventually you want the ease and comfort of a uninterrupted connectivity. And that consumer behavior is the one that is going to be driving postpaid enhancement. So I think that 1% could probably in a year's time be much more or closer to double digits. If not, exactly 10, it would probably be 7-8%, very significantly, and that's a huge change in the composition of the ARPU itself.
Okay, gentlemen, I know we've made you wait very long, but I think just a while more and we'll get the consolidated numbers as well. We'll slip into a short commercial break, but don't go anywhere. Reliance Jio numbers are out and they're looking good, but do stay tuned in. The consolidated numbers expected any time now. We'll be back in a bit. Okay, now we have the numbers, and the consolidated numbers are also looking better than what the street was estimating. So the revenues have come in at 1.16 lakh crores. The expectation was 1.06 lakh crores. So the revenues as well for Reliance Industries, consolidated numbers, what I'm talking about, have been better than what the street was estimating. Even on the profitability front, actually the numbers are better than expected. They'll flash for you on your screen in a bit. Profits 9567 crores. The expectation was 8134 crores. So the profit for Reliance Industries is also better than street estimates. Remember, 9567 crores compares to 13,233 crores last quarter, but that's because of that BP stake sale that you saw. Stripped of that, if you adjust for that, this is actually a growth that we're seeing even on a quarter-on-quarter basis. So these are looking like a good set of numbers.
Yeah.
Do you have the breakup in terms of the petchem business?
So this time around, petchem business has seen a sharp recovery, Sonia. So the revenues have come in at 29,665 crore rupees, and that compares to 25,000 crore rupees in the quarter gone by. And it was expected because the demand was expected to improve. However, it's the EBIT that is a beat. So Nomura was expecting a number of around 3,890 crores. That's in terms of EBIT. And this time around, the company has reported petchem EBIT of 4,895 crore rupees. However, on the refining front, if we talk about the EBIT number, it has come in at 2,000 crore rupees. That is slightly lower than the street estimates of 2,510 crore rupees. But petchem is much better than estimates, even in terms of the improvement that we see in margins. So EBIT margins at 16.5% versus 13.5% on a quarter-on-quarter basis. So GRM is the other number that we'll be watching out for. But do remember, Goldman Sachs in its report had said that while this particular quarter was expected to be weak because there was a refinery maintenance shutdown as well, so the numbers were expected to be this week. But in coming quarters, they expect some recovery to come about. And GRM, of course, is the next number we'll be watching out for. It's expected to remain flat on a quarter-on-quarter basis at $6.4 per barrel, Sonia.
Okay, so the retail numbers.
Yeah, I do have the retail
Okay.
numbers, Sonia, and out here, it looks like the top line is a mild miss, if you must, because Nomura was working with a 1% growth year on year. On the other hand, we have a retail revenue decline of 5% year on year. But sequentially, what is actually a big positive is the operational performance. The retail EBITDA quarter on quarter has grown 86%. Nomura was working with a number of close to around 57-58% in terms of a growth, and 2,009 crores is what the retail EBITDA has been. Quarter on quarter, that's an 86% rise, and year on year, it's just a 14% decline. The street was working with a decline of 28%. So what it has missed in terms of a mild miss in terms of retail revenue has been more than made up by a sharp improvement in the retail EBITDA, which is coming at 2,009 crores.
Okay, so this is a really good performance that we're seeing as far as the retail business, even the petchem business. The EBIT has gone up 44% on a sequential basis at 4,895 crores versus 3,392 crores. So the operational performance for the petchem business, even the revenues are up almost about 18%. Deven, I want to come to you on this. Looks like a very strong performance overall. I mean, on most parameters, the company has sort of beaten street estimates, but purely on the oil and gas segment, petchem is looking pretty good. Big jump quarter on quarter. The margins as well have come in at 16.5% versus 13.5% quarter on quarter. Your thoughts?
Yes, Sonia. I think in the petchem side, you should be getting the numbers on the volume improvement. I think we have been working with the volume increase compared to 8,900 million metric tons to around 9,200 million metric tons. I think that is an area where I think one should be keeping an eye on. So in this particular quarter, certainly I think compared to the last quarter, I think there has been an improvement into the volume. Along with the improvement in the volume, there has been, I think, a better offtake in different petchem products, which is basically resulting into higher amount of profit performance for the company. So these details, I think, would probably, reveal more number of data on the EBIT and EBIT part of it. The refining part of the business, as rightly explained, I think you had the challenge in form of lower throughput because of, maintenance shutdown. And as a result of which, I think some amount of dent into the profit. But overall, my take would be, once the detail comes out, it will get validated, that there is going to be a better margin improvement compared to, the Singapore GRM in this particular quarter. So let us have the detail coming out. But overall, the O2C business, as we call it, seems to be performing relatively better. And I would not like to read too much about, in one particular quarter, if the refining business is not performing because of the shutdown of the refinery. I would not like to read too much into that. Going forward, the situation appears to be, becoming more and more steadier, and the growth is likely to return back in the normal situation in third quarter, in the fourth quarter of the financial year.
Even exactly, that was going to be my next question, because this time around, even the other oil marketing companies, the refiners, they have seen sequential improvement. And for Reliance, the major factor this time around has been the maintenance shutdown. So far this year, the average GRMs have been around $6 per barrel. What are you estimating as demand picks up further? What kind of GRMs do you anticipate for the company?
Certainly, they should be returning back into $7.58 per barrel, depending on different cracks. You do not know at this point of time how the European markets are likely to behave, given this kind of a renewed threat of the economy getting disturbed because of the pandemic. But to me, in a normal situation, if it prevails, then you should be returning back to $7.58 kind of a GRM margin going forward in subsequent quarters.
Right. Prakash, I was looking at the retail numbers. While sequentially there has been a recovery close to around 24% in terms of growth, and over and above all of that, we've seen a big jump in the retail EBITDA. There is still not, normal numbers, the growth rate that we're used to seeing on Reliance Retail, as well as the absolute revenue, as well as an EBITDA that we're looking at, pre-COVID times. How long before do you think this turns into normalcy? And, how long before we start seeing the 10, 15, 20% sort of normalized growth rate coming in for the retail business?
So, Mangalam, interestingly, this quarter would have, if you try and read into what has contributed to the top line growth for retail or the absence of that growth, it's because you actually had only staples and groceries being dependent on. There was no way you could walk into a Reliance Digital or a Reliance Footwear or Reliance Apparel store and pick up stuff which is value added or which is high value, right? So the high end price point stuff is not something that probably would have sold. But what's improved the EBITDA, while you have a low price and inventory that has actually been seeing the offtake, it is actually the supply chain that they had established which has got much more entrenched. I can tell you for one that they have not expanded the presence in multiple cities unnecessarily in this 3 months, but they've deepened the presence in the same cities that they were, the same locations that Jio was working towards. And that is changing the way the margins would improve. So imagine what happens when, it comes back to full throttle. The retail picks up, you have people walking. Festive season is, of course, what we are right now through. And all of that is eventually going to mean that the top line and the EBITDA keeps on growing, the margins keep on improving, and you have operating leverage coming in. So my whole premise on retail is that it's taken a pause just to make itself stronger. And it would probably emerge. So Petchem did the same thing about 6 quarters back. Sonal would probably know, for the last 6 quarters, we've seen Petchem incrementally do well. Because of the kind of investments that were made, there was a pause for 2 quarters. Of course, last quarter was an exception on Petchem as well. But I remember that the trend has been very strong and the EBIT has also been improving and the top line also. The retail will also go through that. Maybe you might have another quarter, but my sense is that weakness or the slowdown or the pause that the retail business has taken is probably behind us. This quarter would probably start a journey which is much stronger in terms of top line growth as well.
Okay, all right, gentlemen, we've run out of time, but thanks so much for joining us. So the summary is that Reliance's Q2 earnings has beaten street expectations both on the top line as well as on the bottom line. And across key verticals, whether it's Reliance Jio, the petchem business, there's been a good recovery that we've seen on a quarter-on-quarter basis. Even for Reliance Retail, all the revenues were slightly below estimates. The EBITDA, the operational performance has been quite strong, and the refining business in any case was expected to be slightly on the weaker side. But all in all, numbers have beaten street estimates both on top line as well as on bottom line. With that, we'll take a short commercial break, but don't go anywhere. Lots more news coming up on the other side.